I'm joined here today with Lachlan Smith, our Chief Financial Officer. With a brief bit of CV there, and Lachlan will introduce himself in a second. But I think just on quickly introducing RUA Life Sciences as a business, there's two main USPs within RUA. That's the textile expertise in implantable medical devices, and the underlying Elast-Eon technology that sits within the group. And we're using the Elast-Eon technology as the platform technology to build a developing company. Within the portfolio, there's 4 businesses. 2 are profitable and cash generative, as Lachlan will demonstrate, and there's 2 businesses that are being developed through R&D phases and now moving on to commercialisation. And the strategy for each part of the business is to realise value, create value from the company. We're based in Scotland. We've got 3 sites in Ayrshire, just south of Glasgow, and currently have 42 employees. And if I can pass to Lachlan, he'll take us through the interim results and the position of the company.
Thank you very much, Bill. Yes, the past number of years have been underpinned by a number of factors, mainly the funds raised in 2020, which enabled the business to scale up its R&D activities relating to both our vascular graft asset and also make significant improvements and developments in our heart valve asset. Coupled with that fundraise, the business has seen over the past couple of years a steady return to pre-COVID levels of sales at both our cash-generating units. Encouragingly, both cash-generating units are expected to grow over the short term. A royalty income stream, which is derived through our RUA Biomaterials business unit, has seen a steady rise in revenues and a modest growth of 6% on the prior period. Our contract manufacturing revenues were impacted in H1 due to some operational challenges that led to a delay in order fulfilment. I'm pleased to announce that the operational team at RUA worked exceptionally well, both internally and externally, with their customer during October and November, and ultimately bringing orders back in line towards our targets by the end of month-end November. Preserving our cash runway and focus on cost control has been central to our financial strategy over the past 2 years, with a small investment to upgrade our systems and new processes, including enhancing our financial planning processes. We have upgraded our controls over expenditure. Furthermore, our new reporting processes are providing valuable insight to management to drive better decision making. Over the course of the last 2 years, the business has continued to improve the profile of both our vascular and structural heart assets, with H1 23 operating R&D expense just under $500,000 against a similar spend in the prior period. External third-party costs in relation to R&D has reduced significantly as we pursued FDA requirements for our vascular graft range. The next slide, please, Hannah. Reconciling back our losses to before R&D is important for a number of reasons. Firstly, it provides a clearer picture of the company's core operational performance by excluding the impact of research and development expenditures. This helps the business better understand how well the company's regular business activities are performing without the influence of R&D costs. Secondly, separating our R&D expenses allows for a more accurate comparison. This is crucial for assessing the company's competitiveness and efficiency in its core business operations. Furthermore, it helps in evaluating whether the company is investing wisely in innovation and if those investments are translating into improved financial performance. Additionally, it enables better financial planning and forecasting. By understanding the underlying operational performance without the noise of R&D expense, the business can make more informed decisions about resource allocation, budgeting, and overall financial strategy. RUA's cash position as at September 23 was just under $500,000. Cash was impacted, as mentioned, in H1 due to the aforementioned operational challenges in order fulfillment. A trading update just the other week there highlighted our current cash position at just over $1 million, which was boosted by both the business overcoming its short-term operational challenges and a successful R&D tax credit claim. The total investment in fixed asset has resulted in the establishment of a pilot plant at our head office here in Irvine, and our pilot plant will be capable of producing initial volumes of grafts once a commercial partner has been sourced. It's worth noting also that there is no further significant capital expenditure anticipated in the near term. As mentioned, our cash position as at the end of September was just under £500,000, with close to about £1 million as at the end of November. The company recently announced that it has concluded a recent fundraising, which will see around £4 million being added to the balance sheet. This additional fundraise, which we'll touch on more through the presentation, will provide the business with an enhanced and strengthened balance sheet to enable a better and more constructive conversations with commercial partners across both our heart valve asset and also that of our vascular graft asset. Okay. For our interim period in 2022, management undertook the exercise to review how the business was managed and ultimately how it should be presented to key users of our financial information. The segmental analysis and reporting has played a pivotal role in enhancing managerial decision making. Segmentation allows management to analyse the distinct business segments separately, provide deeper insight into their individual performance, the risks associated with each segment, and furthermore, the growth potential for each of those business segments. This detailed information enables management to allocate resources more effectively, identify markets, optimise operational strategies, and assess the impact of external factors on each of the specific segments. With a granular understanding of each operating segment, management can make informed decisions, aligning resources to opportunities, mitigating risks, and ultimately steering the business towards sustained success in a dynamic and competitive landscape. Moving on to briefly describe our portfolio of assets. Firstly, we have two profitable and cash-generating businesses. RUA Biomaterials is the IP licensing business that owns Elast-Eon, a growing annuity business with a patent portfolio of 14 patent families. It doesn't require a huge amount of attention, and sales mostly generated through historical contracts. Ultimately, RUA Biomaterials is a fundamental and profitable business for the business, and it generates a significant cash flows to help sustain some of the other R&D work that we have. RUA Contract Manufacturing is where our expertise in implanting textiles and medical devices sits. It benefits from a long-term contract of over 10 years, and we have a fantastic partnership with our main customer. And at current, our pitch book that could see revenues double over the short term. In terms of our pre-revenue businesses, we have RUA Structural Heart, which has evolved from a heart valve developer to a creator of an outstanding heart valve leaflet material, and that is to be made available to the heart valve industry, and which is now nearing commercialisation. And the fourth and final portfolio company is RUA Vascular, which has had significant investment and now has the opportunity to develop into a medical device company in its own right, targeting the $1 billion vascular graft market in partnership with our global distributor, Horsham. And I'll pass you across to Bill now, who'll give a bit more insight into the overall business strategy.
Thanks, Lachlan. Right, so the kind of question, what is Elast-Eon? It's the key platform technology that sits within the group. Elast-Eon is a family of polymers, so is able to be made in various mechanical properties to suit the needs of a medical device, R&D designer. The benefits of Elast-Eon, it is biostable, and it is very biostable. There are many materials that are biocompatible, but the body does break them down. Elast-Eon is designed to be a long-term implantable, lifetime implantable, and as such, very little happens to it as in the body. So it's been clinically proven that it's non-calcific, so there's no build-up of calcium, there's no calcium attachments to it, which is very important when you're looking at heart valve uses. It is very durable and abrasive resistant, it's biocompatible, and is very good in contact with blood. It doesn't form clots. So the synthetic nature of the polymer is, being used certainly within RUA and other customers as a replacement for what has hitherto been used as animal byproducts, and I think that'll become a growing feature in the medical device industry over the next few years, is getting rid of that animal byproduct. The great thing about Elast-Eon is not something that requires a further development or work. It has been in the market for a while. It's clinically proven. It's well over 9 million devices now, and these are long-term, as in lifetime, devices implanted in patients. Well protected from an IP perspective, both from trade secrets and know-how, but also the 14 patent families that sit around the material. And we've got the benefit of having an FDA master file to provide the data to users and for regulatory approval for the material. It's a virtual business now, in that we have licensed out both the manufacturer and the use of Elast-Eon, and that is growing. Some of the customers are shown in the top right-hand corner, and the little graph showing the sales progression over the course of the last few years. So it's growing steadily. It will never be a multi-million pound company, but we would expect to see a growth not dissimilar to what's been achieved in the last 3 years. Moving on to the contract manufacturing business. It truly is an end-to-end medical device contract manufacturer, in that yarn will come in one door and fully packaged medical devices can go out the other door. We're very much a specialist in implantable textiles. That's the niche in the market that we're operating in. And this part of the business came through the acquisition of RUA Medical back in 2020. We operate out of 4 ISO either Class 7 or Class 8 clean rooms, ISO 13485 registered, and also registered with the FDA. And the key thing is that, particularly the customers are looking for is, have we got the capacity to take on more work? If somebody gives us a contract, can we fulfill that? And we've got the space and capacity both in the current clean rooms and in the adjoining buildings that we can develop into. Moving on to looking at some of the work. Can you move on a slide, please? Thank you. Performance-wise, with a great growth in the financial year last year, kind of pretty much recovery from COVID. The business operates on a very attractive 60% operating margin. The revenue forecast for the current year, as Lachlan said earlier, will be second half weighted because of some of the operational issues. We're now in line, if not just slightly ahead of budget within that part of the business, but we're expecting around about 1.7 million in revenue from the contract manufacturing business this year. It's a business that we expect to grow over the next couple of years. We've been working with global companies in bringing new devices in to be manufactured within RUA. We had a 6-figure supply agreement with a global business agreed last year, and our principal customer, we've just agreed a further contract extension in that area. The opportunities for growth, we've got request quotations or request proposals, which are we're working our way through with a couple of key customers, and those should have the capacity to bring in excess of 2 million a year in annualized revenues once they're brought in. So that you see that the sales graph there, 2018, 2019, very stable business. There was a product that was taken off the market by one of the customers within 2020. We suffered from COVID in 21, 22, and the good growth in 2023, recovery from COVID. So it's really you draw that line from 1.4 to 1.6, and that's the growth trend and accelerating that we'd be expecting. So a great business with good margins and kind of very visible growth opportunities from our end. Moving on to the structural heart business, and why we're here and what we're trying to achieve. New technology is required within heart valve material. The current technology that is out there is all based on 1970s technology. 2 distinct types of valves: mechanical valves, shown as kind of the black bit at the top, or animal tissue valves, which are used in both surgical implanted valves and transcatheter valves. So the vast majority of the market is dependent upon the biological tissue. They're known as pig valves, but they're actually made out of bovine pericardium, which is cow-derived material. The continued use of animal tissue, I think, will eventually go. The market itself is desperately looking for alternative leaflet material to replace, where 80 to 90% of the market is currently used on that bovine material. For a good material, what's required, it needs to be durable. If it fails, it needs to fail safely so that it's not catastrophic, and can be used in both surgical or transcatheter valves, surgical aortic valve replacement or TAVR, transcatheter aortic valve replacement. We've been working in this area for a number of years, and we think we've got a solution to the problems that sit within the heart valve leaflet material. And we've created an in-house composite, and that's been designed, as we say there, to eliminate the use of animal byproducts, reduce or even eliminate the need for lifetime anticoagulation treatment. So a patient that's got a mechanical valve will be in warfarin for the rest of their life, and to avoid the risks of thrombosis. The calcification that you get in animal tissue valves, we believe, can be eliminated by the use of Elast-Eon, and with Elast-Eon being a very good copolymer of silicon and polyurethane, is readily processable and can be taken into the form of leaflets. And we think there was something that is man-made. It can, from the manufacturing cost of a valve itself, it can be reduced to make it more cost competitive in the market. So moving on to the next slide, Hannah, if we may. The chart on the right-hand side there sets out the 5 or 6 requirements that are necessary for a successful heart valve leaflet material. Saying 5 or 6, the one that's sitting out there, crimp stability, is required in transcatheter. All the others are required in surgical valves, but the transcatheter also requires the crimp stability. We've known from historic work and clinical work that's been carried out on the Elast-Eon that the green areas of low calcium susceptibility, low thrombogenicity, are not throwing clots, and the hemocompatibility, so it being fine within the blood, that we know that Elast-Eon provides that. The question is, can a composite material that is made through a combination of Elast-Eon and an underlying textile substrate give it strength? Can it be durable? And can it work as a valve leaflet? And that's been the focus of the work within the heart valve team for the last year. But we can move on and just pick up on the testing results that we've had from the material. The results have been spectacular, in my opinion, based on some of the testing results that the team here have undertaken. One of the biggest risks that we thought there could be for a composite material is, would it start to delaminate? Would it not be stable enough to last, in a moving environment long term? So we undertook a thing called flex fatigue testing and ran the material through 400 million cycles. 400 million cycles, about equivalent to 10 years of a beating heart. And the material at the end of that period was pretty much exactly the same as it was at the start of. There was no delamination, and even the marks on the free edge that we cut, they hadn't changed at all. We put the material into a fairly rudimentary heart valve design and ran both a durability testing and hydrodynamic testing to see how it worked. In durability, one of the key requirements for a flexible leaflet valve, which is set in the ISO standards and the FDA requirements, is that the valve must be able to go through 200 million cycles in durability testing. Our valves go through that and has demonstrated itself to be very, very stable. In hydrodynamic testing, basically what we're looking for there is, does the material work as a heart valve, and would a valve made out of that material perform well? The the principal test within that is looking at the pressure gradient or the energy that's required to open a valve when the heart starts to pump. A healthy human heart valve will require maybe 5 or 6 millimeters of mercury to open. If it's requiring 20 to 25 millimeters of mercury, a patient will start to be showing signs of aortic valve stenosis. And by the time that gradient gets to about 40, the patient will no doubt have had a replacement valve. The mechanical valves in the market are very efficient from that perspective, requiring maybe 6 or 7 millimeters of mercury to operate. The biological valves are maybe 12 to 15, so they're getting closer to what would be stenosis, but they're still rock as hard. Our leaflets were working at 6 or 7 millimeters of mercury required to operate them, so very, very efficient from that energy perspective. The size of the valve and the leaflets when it opened, certainly demonstrating that there's about a 25% increase in the size compared to some of the market-leading valves. And if we're looking from a transcatheter perspective, the bit on the bottom right-hand corner of the screen is demonstrating what happens when you take a 23 millimeter diameter valve, and if that was made out of bovine pericardium, it can crimp down to the middle size, but using our composite, which is much thinner than bovine pericardium, it can reduce the size potential of a transcatheter valve delivery. So we think that we have ticked all the boxes that's required in the development of a heart valve, from both the right materials using Elast-Eon to the mechanical properties and the testing requirements that come out of the work that's been done in recent months. So just sort of moving on to the commercialization of the material, with the results we've had, and using relatively limited resources, we've achieved a huge amount within this part of the business. The composite leaflet has been developed. We've been able to manufacture repeatedly the underlying composite material. The bench testing has been fabulous. We're showing over 10 years in flex fatigue without any signs of delamination. And very importantly, we have now filed a UK patent, which has now been filed and submitted. So that's there to protect our underlying intellectual property within the business. So now, rather than looking at developing a heart valve ourselves, we think we've got something that is of such interest that we're looking to take this material to the market by making it available to other heart valve companies for them to use our underlying technology to replace bovine pericardium. And there's developing interest from the industry, and we have an agreement with one of the major companies in the industry that will be undergoing their own testing to prove to themselves that the data we provided them makes sense, and see how it works with their own valve designs, we suspect. So the great thing about the composite is that it's almost design agnostic. So it doesn't require a special design to work with polymer. We know that from our own polymer valve work in the past, that the limitations of the mechanical properties of polymer mean that you need to have a specific design, a strength that sits within the polymer, the composite material, broadens the opportunities and reduces the risk potential within a valve. So we've been demonstrating that durability and flexibility, and being down a commercialization route through which we'll be either licensing or partnering, or even if somebody wanted the entire business, it would be available for outright sale. But that's for in the future. Moving on to the vascular business, if I can just sort of go through the economics and where we stand with that business. As Lachlan mentioned earlier, to date we've invested about 5.7 million in the vascular area. That's sort of 4.4 million in tangible assets has been invested through the P&L account before the restructure, and additional 1.3 million in plant and equipment within that. The budget as it currently stands, which we hope will reduce, but we're just kind of putting everything in that is required. There's over 6.5 million of further costs to be expended in this area before a regulatory approval would be available. But on that point, once it is approved, just from the output of the pilot plant alone, based on the sales multiples that vascular businesses change hands at, that the entire project just on the pilot plant would be worth north of 25 million pounds. And if you double the capacity by moving into another site, it goes in a straight line with your sales potential. So that 26 million is limited only by the production capacity of the pilot plant. The current cost of capital to RUA is painful enough with the fundraise we've recently gone through, but to fund the additional cost, I think was just it would be too dilutive. So the opportunity now is to pursue a third-party funding for the regulatory pathway of the vascular project. So just in sort of summarising through as to where what we've achieved with the vascular business, we have a really good data set of work that's been done on it, and the performance and the biocompatibility of the project. We've got a team in place that's developed it and able to manufacture the pipeline. The manufacturing plant has been set up, albeit in the pilot capacity, but we've verified that it can produce enough product to meet initial market launch requirements, and it can be done at commercial margins. We understand the economics and the potential of the market itself, and just out of the pilot plants, our part of the revenue share through distribution would be north of 5 million on that, at a very attractive margin. And it's a scalable business, and as it scales, the cost of goods reduced. I just mentioned the distribution partnership that we've got in place to take the product to market, and there's some OEM interest in our product. We've actually sold some already to a medical device company who test it as part of one of their devices. And the last 2 years we've spent on the FDA pre-sub process and have an agreed regulatory pathway. So what we're looking to do is capitalise on the work that's been done to date by bringing a third-party financing to take it to the stage of being fully approved. There's a regulatory pathway in the next slide, which will be available for people. We're not going to spend a huge amount of time on it, because this is the part we're looking to get funded. But there's basically a couple of things that need to be carried out there. That's a detailed GLP animal trial that is basically repeating some of the work that was done previously on the product, but taking additional time points and more animals. And then the clinical work with a relatively small clinical trial of about 110, 150 patients, plus sort of just a bit of excess and scope on that. So the process for that is a couple of years work in it, well defined, well understood, but it's sort of just over 2 years before we have a commercial product with subject to the third party funding in place. So the portfolio wise and the portfolio management, we've now got the balance sheet to take the company forward and meet objectives, and what we can achieve with each part of the businesses within RUA Biomaterials. It is the platform technology. The bit of highlight here is that it has not been exploited in heart valve use. We've had actually some interest for other people looking at Elast-Eon for the heart valves. There remains potential for us to take it forward there. Within RUA Structural Heart, it's a disruptive composite material. We've got agreements with other parties to test our material, make sure it works as a heart valve, which should ultimately lead to licenses or other commercial arrangements. And our expectations as part of the business is that, within, the relatively short term, that we turn this into something that is at least cash neutral, not cash generative. RUA Vascular, it's sort of oven ready to be taken forward to its next stage. The product's there, you can produce it, right, the pathway's achieved. It's just we're looking for that off-balance sheet financing to take it through the next stage. And within contract manufacturing, we need to complete the work that customers are looking for us to do in the new product, the new development, taking contracts on and converting them into supply contracts. So in summary, before we open up to any questions that there may be, fundraising, has been completed. More than 50% of the market cap is now in cash or well funded. The valuation of the company is very much underpinned by just the cash generative businesses of RUA Biomaterials and RUA Contract Manufacture. We have had some real good technological breakthrough within the heart valve business, which has provided a pathway to commercialization that's much quicker than the previous plan for, which is looking at developing a heart valve, became available. And then within the RUA Vascular, there's the upside in that business. It's very well positioned commercially. The business model works well, and the regulatory pathway is agreed. We're just now looking to bring in third-party financing to share that future burden to get it to the next stage. But as I said there, the balance sheet is strong. It allows us to undertake portfolio management activities to create value within the group. And the benefits of having that strong balance sheet is, we've already had a couple of contacts from large companies saying, well done on your fundraise, which means that yes, they think it was great that we managed that we achieved it, but also sends the message that they have been watching our financial position, and it's certainly we've seen developments since being in a stronger position. So that's pretty much the presentation. Hannah, if you have any questions from the audience, I'm happy to at least try our best to answer them as well if I can.
Do your assumptions on the pathway to group profitability include payments from licensing partners on the heart valve or vascular graft products, or does it just refer to your revenue generating business segments?
The model has been put together on a quite a conservative basis. I mean, so we're making the assumption that what we think will happen in biomaterials and what we think will happen in the contract manufacturing will come to fruition, because we've got a pretty good understanding of what's happening there. Within the heart valve part of the business, the assumption is that we get a minimum level of license fees or whatever that basically covers the costs that we incur in that part of the business. And just to be on a kind of worst case scenario, we have made no assumption of having a successful partnership for the vascular side of the business. So we get there, on basically what kind of the development costs being covered, but the profitability is coming from the two parts of the company that are currently cash generative. That's the assumptions in the models. It's not guaranteed to the future ever.
Best laid plans. No, right, thank you. Onwards. On the heart valve division, this is a long question, so bear with me. The company has said it expects to shortly formalise an agreement to provide composite material to a large heart valve company for its own testing. And now that an attractive data pack is available, RUA intends to broaden this further through the industry. The questions that follow are: can you say what it means to supply a company with material for its own testing? is it simply about supply, or is it a licensing agreement? And if it is
Can
licensing,
I answer it at that
yeah,
point?
so let's take it in parts. Go with that bit.
Let's take it in parts. So what does it mean? So we've cantered around to see some people that we've been into, you know, we're not in the industry. We've kept the industry very much informed of what we're doing. Back in June, I think we had a trading update that in the middle of it had some chat about the heart valve and the composite material. It may well be coincidental, or it may well be that people have been watching, you know, what we announce, what we say, but we had an approach from one of the people that we talked to saying, "Oh, this sounds interesting. Can we have a look?" So we presented to them. We took them through, you know, under NDA, the data from our testing results, and you know, the response from that was pretty much like, "Wow, this sounds really good," but they don't want to take our word for it. They want to test it themselves. They will have their own testing protocols. They will know how one material performs against other materials that they have tested. You know, you know, we'll allow people to take our material, undertake specific testing, and if it gets the results that, you know, we've had ourselves, you know, I would hope that we then go on to have a discussion about, you know, do you want to do something with it? Do you want to license it, or buy material from us, or whatever? So that was kind of the process to it. But you know, despite what we say, anybody, you know, any big company will want to do the testing themselves and make sure that it meets their requirements under their protocols.
Okay. Can you offer any guidance on how long testing might take?
The testing, I'm not going to discuss what testing regimes that they're doing. Some of the testing itself shouldn't take that long. Some things that may take slightly longer, but similarly, I'm not going to start speculating, putting timescales on when we'll get responses from companies that are substantially larger than us. That one of the benefits we have as a small company is the agility to do things relatively quickly. You know, something that we might say take us a month might be, you know, multiple months for big companies because of the processes and procedures that they go through. So I'll speculate myself, but I'm not speculating publicly.
Thank you. Okay, and perhaps for those not au fait with data packs, what does this mean in terms of timing and protection of IP?
So I mean, within there's the intellectual property in the product itself, and there's the intellectual property that sits within the testing results. So you know, we will provide, you know, testing results or summaries of testing results. People want to have the detailed protocols of it, that can be provided. But you know, it's giving somebody broadly the information that yes, this material should work as a heart valve, and it should work better as a heart valve than what has been currently used just now. And that's what we've been working on for the last year, really, is to get that data ourselves. With 400 million cycles of flex fatigue without any delamination is a big tick in the box. Being able to have a valve open with 50% less energy than a pericardium valve that's, you know, currently one of the best in the market is a big tick in the box. Getting an effective orifice area so the valve opens more, you know, than current market technology, it's a huge tick in the box. And the fact that Elast-Eon doesn't calcify, you know, should mean that the main failure mode of flexible leaflet valves goes away. You know, we've been doing work that, you know, what would the failure mode of the composite be? And you know, if it fails, it should fail slowly, which is what you want. You don't want a quick catastrophic fail. You have a slow fail, which is what happens with all biological valves just now. start feeling them in the packaging.
Thank you. On the contract manufacturing division, what is the expected timeline before a contract is signed to manufacture for this potential new £1 million prospect?
If I give a date and we don't do that date, I don't announce that date, I will get punished. So I'll stick to what we said, that I think in the next, over the course of the next 2 years, we can double the scale of the contract manufacturing business.
That's fair, thank you. And then on to the vascular division, what is the company doing to drum up interest in the clinical trial proposal? Are you aware of any sources of interest from industry, for example, Terumo Aortic, who must like the opportunity to snap you up for a fraction of their size?
I'm not going to speculate on company names or people that we may or may not have spoken to, or what we're doing. You know, there are potential. You know, there's potential for financial backer. There's potential for industry backer. You know, I'm not speculating publicly as to what we're doing and what the you know, the detailed process on that is, but we are working on it.
Lots of ongoing conversations.
Absolutely.
Good. Well, that is it for questions today. So it only remains for me to remind everyone that we do have a research note on our website. In fact, we've had a few on RUA in the last couple of weeks because you've been so busy. But otherwise, thank you both for attending. Thank you for our listeners for joining, and Merry Christmas to all.
Merry Christmas all.
Thank you. Merry
Thank you
Christmas.
very much.
Thank you. Bye.